Hello everyone, welcome back to another Quantower video. In today's video, we're going to discuss how we can identify important support and resistance zones which we can mark and use them for initiating trades without hesitation. So the zones that we're going to look at or find are primarily going to be with the help of order flow or footprint charts, and we're going to use market profile and volume profile for the context. So why do I say context? Because sometimes there are places where we did see an absorption or aggression and we do want to initiate a trade, but the context or the background that we get to see from let's say market profile and volume profile is saying something else. So it is always better to wait it out and see how the thing works. So the charts that I have on over here is Bank Nifty, and the lookout for us is primarily going to be 30 minutes and 15 minutes. So what we're looking at in Bank Nifty as of now is about 150 to 200 points or even more if it moves in our favor and we have the, again, as we see, the context in our favor. Now on the right side over here you see a footprint chart. So on this footprint chart I'll just tell you what is there, so it is easier for you to understand. So on the left side is the volume and on the right side is the delta. So it's not bid and ask or market sell and buy. I just show you a chart that I also put on along with this, so to get a better sense of what is going on, and you can have them on parallelly, but this particular one is a cluster chart that you can have it from here and set it up. And what I have done is I've basically set up the color coding in accordance with the volume that has been taking place for the entire session. So if you see, the cyan over here is second in number, that is the highest volume would be magenta, then cyan, and then blue, and this volume is being plotted or shown over here in accordance with the entire session's volume. So for example, the magenta over here shows that in this session up till this time, this is one of the highest volumes or the POCs for a 30-minute bar, which is the highest in nature. Now this helps me decide how and when should I actually mark that zone to be important, or should it be of significance to me. So to start with, this is the Friday's chart, and if you look at the market profile on the left side, let's go to the volume profile for people who do not understand. So at this point it might look bearish, yes of course, because it has been it is broken down of a balance area and it has been going one way to the other side, and there is still a little bit, we can say that the gap has been filled that was vacant, and we have been approaching one side. And what we have seen is what we can see in the volume profile as well and the market profile, that the selling at this point isn't that aggressive. What do I mean by that? That it did form a B-shaped profile. Now there is a little what people say is, when we have a B-shaped profile, it is a long liquidation, and that means if a lot of longs have been accumulated and they've started liquidating, and that is why this has happened. Yes, of course, that is true, but the thing is that this is taking place at the lows. This is taking place at the lows of a balance area. If you look at this, so this was a balance area that has broken, you can say a consolidation phase. If you look at a daily chart, it has broken, and it has just broken the, if you see the previous 2 week low as well, and has come to a point from where we saw the up move going in one direction from this, and you saw the up move, and this was the initiation in the later part of the day, or in the initial part of the day, and from there on, this is the first time we've broken it in the last 2 weeks, if I'm not wrong. Now it has taken support from if you see the gap area or the single print zone that was there, that was formed on the selling part, but again the market opened one fine day quite on top of that, because it was a new day, and by new day I mean is that this was the first day of the monthly expiry. So that is why the market, again, the premium shifted. So you can go and have a look at the spot chart as well. But the interesting part is, even if the premiums were high, this was a one-way move to the upside, and a lot of strong buying was seen, and it did defend these zones. If you see this zone, which was later in the half, and they did defend this zone for a good week or so. And only after that did we break, and the first time this zone was tested, you can see over here it was defended and there was a tail. So the tail and the excess part we can discuss on a later video. The important part is get into what we are seeing now. we filled the gap, of course, and we've come here and we've taken a sort of a support of, there was in the D period, if you see, if you expand the market profile charts, is something in the C period, I'm sorry, there was a tail or there was a buying of some sorts. Now here is the part where we go into the footprint charts and see what was actually happening. So this is the part A, B, C, that is a 30-minute period is A, and so on, if for people who are new to market profile. So if you're confused, we can discuss this in some later videos, but let's go dive into the footprint chart. Now the volumes were quite high, as you can see over here, and you can look over here, these are clusters that were formed, and a lot of selling was taking place. I don't know if you can see, I'll just expand it, then I will show it in a different view, which you can also do. So if you see, this is all selling that is happening here. I'll just mark these zones so that it becomes easier for you to understand. And if you look at these zones, okay, this is all selling that is happening here. This is all selling, and what happens here is all this is selling, and we'll just discuss this entire area, and you see a lot of volume clusters. So obviously this is an absorption that is taking place. Now these zones are really important, and you can mark them. So whenever the market comes here next time, you can expect a 150 point move up. But now comes the part where I said the context also becomes important. So why do I say that? So if you look over here and you look that this was all selling that was taking place in the D period, that is the bar starting from 10:45. There was some buying over here, you can see in the delta, the max delta, but the delta closed absolutely normal. So there was selling that was continuing over here. And when the bar opened, that is the first bar, the first half an hour, what we can see over here is, look at this part, this volume cluster. There was an absorption that took place in the buying zone, and the market fell down, and it almost balanced the whole day. So if it looks as if this was a good place to take a long for about 200 points, which we do get, because as I have discussed this in the previous videos, what do you see over here, that the volumes were picking up. This one was also good volumes, but whilst this was coming down, look at the volumes that have dried up completely. And then what happens is, this is the exhaustion that is taking place, or the absorption as well. So the sellers that are now coming in are with lesser volume. Obviously there are weak hands, and they're all getting absorbed with so much ease. So this is the place where you could have initiated a long, and this is so because you've seen the absorption taking place, and somewhere here you can go in for 150 to 200 points. And the zone that we were expecting to hold was this zone. Looking at the way the profile was turning out, it was a completely balanced profile. This type of profile is taking place generally 60 to 70 to 80% of the times. If you look, all these profiles are like this. Even if there is a down move, you will see in consolidation happening even in a move like this. So whenever you're seeing profiles like this, you can generally, whenever you reach the top or a bottom or this range or top, so you can aim for the center part, that is the POC. So this is what we were expecting somewhere over here. So when we reached somewhere here in the EFG period, what we were expecting is a touch to the 46,700. Of course, what we were not expecting is this sharp pullback that happened. This is the zone that we were expecting, or maybe until this this part over here, but there was a sharp pullback, and it is all taken back in the next half an hour bar. Now another thing what we can carry forward before we go ahead, and what we should look for on Monday, what we'll do is we'll go on into a 30-minute chart. This is again a footprint chart, but this is a cluster chart and imbalances in it. So what I've basically done is I have the imbalance zones as well. So when the market was going down, it gives you a better context. For example, let's go into the 15th of March. This is the older zone. I had drawn it. So this is what was happening. So this is the 10-15 bar, and this is the bar that we are talking of. And if you look over here, this place, if you look at the profile over here, it's similar to this, but it gives a better visual representation. And you look at these zones, these continuous POCs that I keep talking about, they are holding. So a break above this is my trigger to go, and this was the zone that I was talking about, and I was looking. The first one was this, somewhere close to 694, 670, which we spoke about over here, and this was the second zone. I wasn't expecting this to happen. That happened over here on the 1345 bar with really high volumes. Of course, this was taken with a view to take out all the weak hands of the stops, and as soon as they were taken out, the market came back again. Now this doesn't mean that the market is short, or it's weak, or it's going to go down. Now, how do we play Monday is what we can expect is, if for example we open somewhere in this zone. I will just mark the zones for you. So if we open in these zones, that is between these zones, so what do we want to see is whenever we approach this zone, okay, so what we want to see is I'll just show you on the chart that we just had. So like we had over here a bar like this, a 30-minute bar. You can come down to 15 minutes if you're wanting to take 150 or 180 points. I suggest not going down below 15 minutes, because these higher time frame bars do have greater significance and do hold their positions a little better with a higher probability. So if I see something like this, that is something like this rather, that an absorption of sort is taking place and the bar does close above that cluster, then I am ready to take long again. Again, the first target becomes this, and the next target goes beyond that. Now if the market let's say opens let's go down and opens below this zone, that is this POC which was defended and a lot of absorption was taking place. So if it opens below 540, the first test what we can expect is a 400. So immediately if it opens above and forms a bar like this that we have just seen over here, something like this, that absorption is taking on the buy side, we target the other side, that is 46,400 at least. So we get 150 to 200 points is what we're targeting, and our stop again becomes about 80 to 100 points, that is this zone. I'll just mark it for you. This zone, this is if the market opens below this, we are targeting this. And most likely whenever something like this happens, and if it doesn't open and immediately enter the zone, if it opens and immediately enter the zone, the target we want to have in our minds is this one, 780. But if it doesn't and forms a bar like this in a 30-minute, so this is what we're expecting, 46,400 and targets below that to be tested. So let's go down and see the zones that we have, and these are the zones that are there. Now just to give a better picture of how the market has moved, let's go back to the footprint chart, market profile chart. So the move that is started over here from this day onwards, let's say this day onwards. So if we split this profile and we see this E period is the place where we started, we consolidated, and we moved down, and this has been defended 2 times. That is why I am more inclined to see that the sellers that have stepped in here, and these are the sellers that obviously wanted to take out this zone, this absorption that had taken place on the 12th of March. These sellers that stepped in here have taken the market all the way down. So there is someone at this level, that is 447, 460 to 500, between these levels, that has taken the market down. And now let us go, so this is on the 13th of March. So let us see what is actually happening, so that it helps you guys whenever you see some bars like that to initiate or not be on the wrong side rather. So if you're looking for a long and you see something like this, you shouldn't be you should square off your position and if possible turn the other way around. So let's go to the 13th of March, and if you see this is the A period, A first 15 minutes bar, 30 minutes bar, pardon me, 2, 3, 4. Now look over here, you see a sell absorption, a sell imbalance that has formed in 2 consecutive bars, and the third bar, that is the E period that we are talking about, the D period, is not able to break it. Okay, and this is where we start consolidating, and again the same thing that I just explained. Look at these POCs forming very close to each other and the 3 imbalance zones, and as soon as this area breaks, it's our initiation, we initiate the short trade, or rather if we are in a long trade, we get out of it. And the other thing that we do is when we see this heavy selling and the volumes pick up, this is our confidence that the market is going to go down further. And let's see what happens. So this goes down, it again takes a rebound of sort in this selling. There is an absorption that is taking place here, but again it isn't able to break this zone and goes down further. So it is a confirmation that we're going to get a lot of good points, 150 to 80 points that we're looking for. As soon as this break, we do get our 150 to 80 points that we've been looking forward to. And the next place we see any sort of absorption is this. So you can see how the bars form and what we're talking about. So look at this bar close and look at the absorption and the sellers that are stepped in, and they've all been absorbed over here. So this is a bar where you do not want to go short. Look at the difference between the bars that we were just talking about. Look at this bar, look at the imbalances that are forming, and look at the zones that were forming, and any absorption that was trying to be I mean, there is one place where over here where someone does try to step in, and they do try to go on top, but look at where the bar closes again below this POC, and again the POC is on top, and the sellers have again stepped in. So even if you've not stepped in here, this is another place to take another shot and look for another 150-80 points, because we can straight away see that the buyers are not succeeding over here. And when something like this bar happens, the most likely outcome is going to be a test of the lows or a break of the lows, which eventually happens. And now I would like to show you this bar from where a reversal of sorts takes place. Now look at the difference between these bars, the aggressive selling, and look at these bars. So for every aggressive selling that has come here and taken the bar, look at the aggression that is here. It's not that much, and look at this, buyers also step in. So you see over here the delta is negative, but the buyers also stepped in. I'll just show you on this bar. So this is the 14th of March, from where the opening of 14th of March. So let us see over here. So what we were expecting is another down move. Of course, there is a buy imbalance over here, so we are expecting an absorption of a sort, or a pullback on top, because there is a zone that has been marked from the previous imbalance levels. Of course, we are expecting that. That is why we use footprints to see what we can see over there. And look over here, this is the bar 14th March, if I'm not wrong, and look at the cluster here. So this is somewhat similar over here, and look at this, what I was trying to tell you. Look at the absorption that has taken place in this zone. These are all red zones, big red zones, and a lot of absorption has taken place, and the bar closes above that. And the best part is in the next bar. We just discussed the aggression part. Now let us discuss the absorption part. The next two bars are not able to take this down, this zone down. That is why the initiation to the long side over here. Similarly, this zone becomes a carry forward zone, and whenever we test it next, we will see what happens. And we do see some sort of absorption very late in the day. Now this is exactly what I was talking about for Friday, and on the 15th of March on Friday it opens below this. So similarly, what we've seen is quite a similar scenario over here, where this is all sell side absorption, and if the market opens below it and tests it, we can see a move lower down, similar to what we saw here. But if we see immediate entry into this zone, that is I'll just mark this zone again. So immediate entry into this zone above this 520 after opening gap up, gap down, we can expect this is the first zone that is going to be tested on top. So that is how we can plan. The last thing I want to show over here is this 14th March bar that we were discussing, the opening bar. I will just go ahead and expand this so that you can see the numbers as well, and it makes sense. So if you look, this is the whole cell cluster, and look at this cell cluster. So these guys were all absorbed, and the market isn't able to take it down, even if you look 10-20 points below this. That is why the data over here footprint becomes so important and nice to carry forward. So similarly, let's go back to what we've just discussed for the Friday part, and this is the zone that we just spoke of, and we can actually go ahead and mark this zone. Let me just get my rectangle tool out, and this is the zone that we're talking about. Okay, so this is the zone I want to be defended, and if the market opens below this and forms an absorption or buys of sort, I will certainly we can certainly initiate a short trade on the downside. And the targets to the downside, of course, let's go back here and see. So this is the zone when it breaks first time. Look at the selling that comes. So this is how a zone, an important zone which has acted as a support, should break. If this bar would have closed somewhere here, let's say above 820, we would have been looking at a market that would have gone above. But what it does, it closes right there, and this imbalance zone that was formed here, this bar isn't able to take it down, and we see a move down, and the first absorption of sellers takes place here. This is on the 15th of March that we just discussed, and this is the POC, continuous POCs, that acted as a resistance. Now let us see the zone that we can look for below. So these are the zones that are already marked. And similarly, if you go on to the volume profile chart, this 125 is the zone that if we breach this zone, that is 300 as well, that is this zone, the next place that we are going to is 100. So that is another 200 points. Whether we do that on Monday or not, or we go ahead, is again, we discussed our plan of action. If we again open above the absorption zone and the aggression zone, we are going in for about 47,000, 46,960, the levels that we saw over here. And similarly, if we open below this zone, we can test 300 and 400, 350, 300 as well on the downside. So hopefully this video was of some help to you guys. Until next time, thank you. Bye bye.